Welcome to StockInvest, where we delve into the pressing market movements before the opening bell. Today's focus includes Trump's tariff announcements and their anticipated impact on the stock market. United States stock futures have dipped slightly, with investors on edge over President Trump's tariff plans. The markets are hoping for a less severe announcement next week, sparking both cautious optimism and concern. President Trump has been vocal about limiting exceptions to upcoming trade tariffs. This has created a wave of uncertainty as the markets brace for potential reciprocal duties on foreign goods. Trump's tariffs are expected to target approximately 15 countries, addressing trade imbalances. Sectors like automotive, pharmaceuticals, and semiconductors may see new levies, although specifics remain unclear. Global markets have felt the tremors of tariff fears, with economists warning of inflation and slowed growth. However, some signs of market stabilization are emerging this week, offering a glimmer of hope. As we look ahead, corporate earnings are in focus. Key players like Chewy, Dollar Tree, Cintas, and Paychex are set to release their earnings, possibly influencing market sentiment. Cintas and Paychex's earnings could provide valuable insight into United States employment trends. This will be closely monitored by analysts seeking clues about the broader economic landscape. Dollar Tree's earnings are particularly anticipated, given the current economic indicators pointing to low-income consumer sentiment. Analysts are eager to see how they compare to recent Dollar General results. Across the pond, United Kingdom inflation figures have offered some relief. February saw a slower-than-expected rise, which might ease pressure on Chancellor Rachel Reeves ahead of her spring statement. Annual consumer price inflation in the United Kingdom rose by 2.8% in February, down from the previous month's 3%. This is still above the Bank of England's target, yet below market expectations. Core Consumer Price Index in the United Kingdom, excluding energy and food prices, showed a monthly rise of 0.4%, with an annual rate slightly down at 3.5%. These figures suggest a moderating inflationary pressure. Oil prices have edged higher, driven by supply concerns and a surprising dip in United States crude inventories. These developments continue to support the upward momentum in oil markets. The United States recently brokered deals with Russia and Ukraine to halt maritime and energy-targeted attacks. This diplomatic move may lead to the easing of some sanctions, potentially increasing crude supply. Oil benchmarks reached their highest in 3 weeks, bolstered by United States efforts to curb Venezuelan and Iranian oil exports. The market remains sensitive to geopolitical developments. The American Petroleum Institute reported a significant drop in United States crude inventories, exceeding expectations. This data is poised to influence crude market dynamics further. An official United States government report from the Energy Information Administration is expected later today. All eyes are on this report for confirmation of inventory trends and their implications. As we wrap up, remember to subscribe, like, and press the notification bell to stay updated with StockInvest. Thank you for joining us, and we will see you next time.